Global energy politics are shifting fast, with new alliances and rivalries emerging almost overnight. The world's oil markets, once predictable, are now in a state of flux, as countries scramble to secure their energy futures. The old order, dominated by a handful of major producers and established trade routes, is being challenged by a wave of uncertainty and change. At the heart of this transformation is Turkey, a nation uniquely positioned at the crossroads of Europe and Asia. Today, Turkey finds itself at the center of a major oil realignment, with its ports and pipelines more important than ever before. As a bridge between continents, Turkey's strategic geography gives it outsized influence over the flow of oil from east to west. This has made it a key player in the unfolding drama of global energy politics. Western sanctions on Russia have forced countries to rethink their energy dependencies, with real consequences for those long reliant on Russian oil. The ripple effects are being felt far beyond Moscow, as governments and companies scramble to adapt to a new reality. The new sanctions regime has made buying Russian crude riskier and more complicated, especially for nations like Turkey that straddle east and west. Every shipment is now subject to greater scrutiny, and the rules of the game are changing by the day. Turkish refineries now face tough choices, balancing the need for affordable energy with the risk of running afoul of international sanctions. The stakes are high, and every decision carries significant economic and political consequences. If they continue to buy Russian oil, they risk being cut off from Western finance and markets. But if they turn away, they must quickly find new suppliers, often at higher prices and with less reliable delivery. This isn't just about picking sides, it's about economic survival and adapting to a volatile geopolitical landscape. The choices Turkey makes now will determine not only its own prosperity, but also the stability of energy supplies for millions across the region. As India and other major economies adjust their oil buying strategies, Turkey is under mounting pressure to follow suit. The global oil map is being redrawn, and Turkey's role is evolving with it, fundamentally changing the direction and volume of oil flows worldwide. For Ankara, this is both a challenge and an opportunity. Diversifying its energy sources could reduce its reliance on Russia and strengthen its hand in future negotiations. But it also means navigating a complex web of international expectations and domestic needs. The decisions made now will reshape Turkey's energy future for decades to come, sending a clear message about the power of economic pressure and the importance of adaptability in a rapidly changing world. To grasp Turkey's current pivot, you have to understand just how dependent it was on Russian oil. For years, Russia supplied nearly half of Turkey's crude, about 317,000 barrels a day, thanks to proximity, price, and refinery compatibility. Turkish refineries were optimized for Russian Urals crude, making any shift a major logistical and technical challenge. The entire supply chain, from ports to storage, was built around Russian oil. This deep integration meant that any disruption would require a massive overhaul. Turkey's unique diplomatic stance allowed it to benefit from Russian discounts while staying in the West's good graces. But with new sanctions, the risks of handling Russian oil now outweigh the benefits. Ankara is being pushed toward a new, uncertain energy future. Under mounting Western pressure, Turkey's energy sector is making a decisive break from Russian crude. Major refineries are now sourcing oil from Iraq and Kazakhstan, redrawing their supply maps. Iraqi crude, similar in quality to Russian Urals, is now flowing into Turkey at record levels, up to 141,000 barrels per day. Kazakh Kebco, loaded from Russian ports but sanctions compliant, is also filling the gap. These moves mark a clear intent to diversify and reduce risk. Turkish refiners are even looking as far as Africa and South America for new suppliers. This global search is about building a more resilient, less politically vulnerable energy portfolio. Turkey's pivot is reshaping its place in the global oil market. The Star refinery, owned by Azerbaijan's SOCAR, is at the forefront of Turkey's ambitious shift away from Russian oil. Located on the scenic Aegean coast, this state-of-the-art facility is not just a symbol of industrial might, but also of strategic adaptation in a rapidly changing global energy landscape. Until quite recently, Star's operations were heavily dependent on Russian crude oil, with the vast majority of its supply coming directly from Russia. This reliance made the refinery vulnerable to geopolitical risks and shifting international policies. Now, in a decisive move, Star is diversifying its sources, purchasing significant volumes from Iraq, Kazakhstan, and a growing list of other non-Russian producers. This diversification is not only about supply security, but also about aligning with new global trade realities. In December alone, 4 new cargoes are set to arrive, replacing a substantial portion of Russian supply, up to 129,000 barrels per day. This marks one of the largest and fastest shifts in sourcing for any Turkish refinery in recent years. This isn't a minor tweak. It's a fundamental transformation in Star's day-to-day operations. The refinery's teams are adapting to new crude blends, updating processes, and ensuring that quality and efficiency remain uncompromised. The refinery's pivot is a calculated strategic move to maintain access to global finance and insurance markets, which are increasingly scrutinizing ties to Russian energy. By diversifying, Star is safeguarding its business and future growth. As a major player in Turkey's energy sector, Star's actions are closely watched. Its bold steps are setting a new standard and sending a clear message to the rest of the country's refining industry. The rapid transition at Star demonstrates that moving away from Russian oil is not only necessary in today's climate, but also entirely achievable with the right strategy and commitment. Star's example is likely to influence other refiners across the region, encouraging them to rethink their own supply chains and embrace a more resilient, diversified future. While Star moves quickly, Tüpraş, Turkey's largest refiner, is taking a more nuanced approach. Tüpraş is splitting its operations. One refinery will phase out Russian crude entirely to keep exporting to Europe, while others may still process discounted Russian oil for the domestic market. This dual strategy lets Tüpraş comply with sanctions for exports, while keeping domestic fuel prices in check. The company is also boosting imports of Iraqi and other non-Russian grades to reduce risk. It's a delicate balancing act, reflecting Turkey's position between Russia and the West. Tüpraş's approach shows the complex calculations energy companies must make in today's political climate. It's a pragmatic solution to a tough problem. The numbers tell the story of Turkey's rapid oil realignment. In early 2025, Russian oil made up 47% of Turkey's imports, about 317,000 barrels per day. But by November, Iraqi imports surged to 141,000 barrels per day, a 76% jump over the yearly average. At Star, Russian crude went from nearly 100% of intake to less than half in just weeks. 4 non-Russian cargoes now account for up to 129,000 barrels per day at the refinery. These shifts are clear evidence of a major strategic pivot. The data shows Turkey is moving fast to diversify its oil sources. The transformation is visible in every tanker that docks. Turkey's search for non-Russian oil is going global. Tüpraş recently bought its first-ever cargo from Brazil, opening new supply routes across the Atlantic. The company is also importing Angolan crude, further diversifying its sources. These moves are more complex and costly, but they offer security and compliance with sanctions. By tapping into South America and Africa, Turkey is building a more resilient energy network. Every new supplier strengthens Turkey's independence and forges new economic ties. This isn't just about oil, it's about reshaping Turkey's global partnerships. Turkey is transforming from a dependent customer to a global energy player. Turkey's bold pivot in its oil strategy is sending shockwaves across the region, reverberating far beyond its own borders. By shifting its energy partnerships, Turkey is not just making an economic decision. It's fundamentally altering the balance of power in a region where oil is often at the heart of diplomacy and conflict. For Russia, losing Turkey as a top customer is a significant blow. Moscow now faces the challenge of finding new buyers for its oil, often at steeper discounts, which puts additional pressure on its already strained economy. This loss is more than just financial. It's a strategic setback that weakens Russia's leverage in the region. The shift directly impacts Russia's revenues, advancing the goals of Western sanctions aimed at curbing Moscow's influence. As Russian oil exports dwindle, the country's ability to fund its foreign policy ambitions is increasingly constrained. Meanwhile, for new suppliers like Iraq and Kazakhstan, Turkey's growing demand is a major economic win. These countries are seizing the opportunity to deepen their energy ties with Ankara, opening doors for broader cooperation in trade, infrastructure, and regional security. Turkey's diversification strategy also gives it greater diplomatic flexibility. By reducing dependence on any single partner, Ankara can negotiate from a position of strength, balancing relationships with multiple countries and enhancing its role as a regional power broker. This move highlights the growing importance of economic tools in global politics. Energy resources are not just commodities. They're powerful levers that can shift alliances, influence negotiations, and even determine the outcome of conflicts. As Turkey reduces its reliance on Russian oil, it gains more autonomy in shaping its foreign policy. This newfound independence allows Ankara to pursue its own interests with greater confidence on the international stage. The energy shift underway could reshape alliances and influence throughout the region. As Turkey forges new partnerships, the traditional power dynamics in the Middle East and beyond are being redefined. Ultimately, Turkey's evolving strategic posture signals a new era in regional geopolitics, one where energy, diplomacy, and national interests are more closely intertwined than ever before. Turkey's oil strategy shift is about more than sanctions. It's a quest for energy resilience and independence. Moving away from Russian oil means adapting refineries and managing more complex supply chains. While this may raise costs in the short term, it's an investment in long-term stability. Diversification protects Turkey from future shocks and political risks. The transition will require innovation and new partnerships, but it's a necessary step. Turkey is declaring its intent to be a more autonomous energy player. This pivot will reshape its foreign relations and economic future. The path is challenging, but the goal is clear: energy security on Turkey's own terms.